Good morning and welcome to the Monday Market Update. I'm Nash Paradise. Joined here with me is Andrew Cady. Andrew, how are you doing this Monday morning?
Doing excellent. Doing good.
Excellent and good. I feel like you're going backwards there, but
overall, I'm really sore. Okay, I did a 20-mile hike on Saturday. My muscles hate me.
I saw that getting ready for that the Everest climb, the 29029 or something.
Yes, sir. It's coming up in 6 weeks.
That seems like an interesting decision for a man about to be 50 years old. But hey, whatever works for you.
42.
Really?
Yes.
I forgot we were the same age. You look great.
Thank you.
So yeah, let's move on. Let's talk about what happened last week. We're giving it, mid volatility. Things were fairly smooth, and it really shouldn't have been that mid volatility. It's kind of weird to feel that lately. What are your thoughts on last week's movement?
I'm beginning to feel like investors just don't care anymore. Like everything is, this whole conflict with Iran has been so much talk followed by not actually happening what's being talked about. It's like, we've reached a peace deal, and then Iran says, no, we haven't. And then we've reached a peace deal, and yes, we have. But then it blows up 2 days later. I think investors are just weary at this point. They're like, what do we actually believe? What is actually happening?
Yeah, we call that like outrage trauma. It's like you can only react so strongly so many times. Oil prices react and then retrace and react and retrace. Bond traders are doing the same thing, and everything's getting a little muted as it's got a back and forth vibe to it. And nothing means as much as it did, both positive and negative. So we're flattening a little bit here, and that's what gave us the mid-ground volatility. So not mad about it. Let's take a look at what we had for econ data last week. I was not here last week, so I know you set the forecast out here where we had some heavy stuff on Tuesday. Did anyone care about the economic data as we got through the week?
Not terribly. I think it helped at least markets remain stable in the face of oil prices.
Yeah.
We and I've got to look over here because that screen's too small for me to see. Producer price index, expectations of a 4.2%. We came in at 3.8. So I think this just helped the market find some footing throughout the week. And then obviously the big news of the week, which wasn't on the list, was, the Strait of Hormuz opening midday on Friday, which now apparently is closed again. We don't really know. It's
taking a 3-day weekend. I mean, who knows? It is, interesting. Economic data is keeping things in check. We haven't had anything crazy in a while. We've had some pretty good misses, the week before as we were getting into, some of the inflation data. But, with March's data not being fully formed, no one really cares about anything and everything right now. Is it transitory? Is it not? Depends on how long this conflict is going to last. Investors haven't really made up their minds on things. So, yeah, the big news Friday, Strait of Hormuz opens, things get better. Monday, it's closed. Things aren't much worse. Very small movements here. And, to your point, I think everyone's just got some fatigue around that. Let's take a look at what is expected this week. Maybe we've got some economic data that really makes a difference. No, not really.
Not really. I mean, I think I think the thing that is not on this, because it's not econ data, but will probably move markets, is that the ceasefire expires tomorrow night.
Mm-mm.
And so if there's not meaningful talks of something actually going forward and we begin bombing again, we probably will see things deteriorate quickly on us. So, Tuesday night is definitely something we got to watch for.
Yeah, I mean, bonds already seem to be reacting a little negatively for no good reason. There's no econ data that's hitting today, but the conclusion of the ceasefire, what's going on in the Persian Gulf, we'll see. So, as much as I'd like to set, any kind of action items for the week on the data, we just don't have any huge stuff week over week over week. In this case, the retail sales are, set to, go up and then down depending on which group, if you're going overall full market or the control group. So, I mean, it really puts us in an interesting spot where when you've got conflicting data points moving in different directions, you're going to generally have some of that flat line, mid movement. Yeah, nothing huge this week. We're going to be watching the tweets.
Yeah, this week will be very much directed by technicals. I mean, the 10-year treasury has formed a very strong floor underneath of us at this point. That 421 to 419 range is really a triple floor of support now, with the 25-day moving average, 50-day moving average, and the 200-day moving average. So if we actually see some really good news come out of the Middle East, we will probably have a chance of cracking that floor. Otherwise, if it's mid news, we probably will stay around that 420 to 425 on the 10-year treasury, with oil really being the driver behind this whole thing.
Yeah, I love that. We're at 426 right now. And I know we don't have a lot of upward resistance. I mean, we can easily blow into the 430s, mid 430s without much of a problem, which is not ideal for interest rates. But, the mortgage-backed securities yields have pushed through the 25-day moving average and the 50-day moving average now at this point. So headed in the right direction. And anytime overnight average interest rates are in the low mid sixes, that's a good thing for some balance in the economy.
It is. And I do think, we're probably not that far away from seeing things turn towards the better if this conflict can wrap up. There's been a lot of very, very weak data. Let's say this: if the data we've gotten on these charts over the last 3 weeks, 4 weeks, was just the data we've gotten, there was not oil prices and conflict going on, we would be in a really good spot with mortgage rates.
Yeah,
very good spot.
Definitely be under 6% at the moment.
We'd be under 6%. So right now, this week, sorry, we don't have a long one for you guys today, but all eyes on oil and Twitter, or X.
Is it or Truth Social
or Truthful? I don't even know what it is anymore. I've
just
shut it all off.
We're both 42, so everything's a tweet to us. Like, I stopped. Sorry,
aging
we're not
ourselves.
doing social media. All right, Caden, let's see what else we got here. All right, Fed funds. I do find it interesting. This has tweaked a lot since the last 3-4 weeks. Yeah, you've got Trump coming out and saying, "Hey, with the new Fed chair, rates are going to get lowered," and I feel like these futures are kind of strictly based on that singular tweet. Truth X. I don't know. Because otherwise there's not a lot of good reason to be back here necessarily. The data would support tweaking a little bit, but we're also looking at so far through the end of the year that, it's irrelevant. We got Fed Day coming up in 9 days. We're not seeing a change. We're not seeing a change for a while, but the long-term futures, dropping a quarter to a half, like being able to hit some stability in 2027 at that 300, 325. That's kind of cool to see in the future. It's a whole lot better than straight line bricked at 375.
I agree 100%. I mean, this is, even from when I did this last week, this is a big change of moving up, the next rate cut. Again, this is just all going to be on the conflict. We got to get this thing resolved so we can actually find a footing again. I mean, we do have Kevin Warsh going in for the Senate confirmation hearing. That begins, I believe, tomorrow. He will be, properly filleted open and grilled. So that'll be very interesting to watch and see how that shakes out.
Yeah, there will be, I think, some moving around on that. Trump's threatened to fire Powell again if he, refuses. I'm like, okay, those things are all taking a back seat, but we do need to look forward into what happens after Iran. And, thankfully, U.S. doesn't seem to have a fantastic long-term strategy with what to do in Iran. And, they're losing a lot of support from the base for being here. And, if you don't have a whole bunch of support, you don't have a well-crafted plan, and you don't have a great exit strategy, there's a good chance it ends sooner rather than later. And then we all just move on with our lives. So if we get that, then we get to talk about things like Fed chair, Senate confirmation hearings, the boring stuff that keeps rates in a good spot. Let's get on into our next slide here. We talked about this a little bit.
Pretty.
I know. Coming back. It's been a good week.
It's been a good couple weeks. Like I think we underestimate the slow trickle down. We're the frog put in the cold pot of water and it's slowly being turned up. In this case, the temperature's slowly coming down. And, I still feel like there's such negativity from the loan originators I see in Facebook groups and all this stuff. Guys, rates are down 0.3% in a couple of weeks here. This is a slow trickle down effect. And you know what? Keep complaining. I'm going to keep closing loans.
Yeah. And from 6 to 6.6 to 6.29, like that shouldn't move the needle significantly compared to where we've been and how long we've been in here, 3 years in this range. This is better. This is the rates that we were hoping to get, by end of year 2026 was in the low sixes. So, mortgage rates are headed the right direction. We talk a lot about overall movement. We look at this, you can see the escalating conflict. Hopefully we're moving in a nice direction. There's been plenty of times that we've gone down and up and, had this rebound effect, but I think most experts are all, pointing towards this is a trend that we can expect to continue. So as long as we keep moving in the same direction, things can keep going down very slowly, not quickly enough to where you sit on the sidelines and wait because, if I can get a 6.15 instead of a 6.25, now my buying power is completely changed. Now this is still take action range, take action type of drops. And getting down, to those that's more significant upper fives. There's a lot of things that have to happen between now and then regarding the Fed, regarding the end of the conflict. So don't hold out for that. If you like it, lock it and go out and drive the consumer sentiment yourself. Drive what is being communicated out on social media to your real estate partners. Because rates are low, there are wins, seller concessions are still there. We're seeing flattening, if not straight up depreciation in a lot of different markets on home prices. Buyers are winning right now and should be. It just depends on where they're getting their information from.
That's it. Well said, Nash.
Easy stuff. So we've got some things to be looking at this week. We're going to be paying attention to a few things in the news so we can come back next week and tell you how messed up, when we're expecting some smoothness, how crazy and wonky it may have actually gotten. Just shows that we don't really know. And but you should still be paying attention because we're going to tell you what to be communicating. That's the big takeaway. Write your notes. Know, how do I become the expert for the people where it matters? The narrative is messed up right now. We're seeing it all over socials. Go set the narrative, control the narrative, get in the right circles. Andrew's having a killer month. I closed a bunch of stuff this month too. Like
Nash is having a killer month.
Nash is having a pretty killer month. It's not bad. It's another big one, but that's because there's wins to find everywhere. And your attitude, your energy is going to determine the energy that you bring into your circle. So convey the right stuff and you're going to get the right kind of people.
I could not agree more. Guys, negativity is going to bring negativity. And you're going to surround yourself with negative people. Find the positivity. Put the silver lining out there, even when it seems like it's a frustrating day in markets or whatever. You're going to draw those type of people in. Listen, I've only been back originating for 1 year. If 1 year into this, I can have back-to-back months at $6 million, and this isn't like boom refi business. This is 90% purchase business. It's doing the work, keeping positive, and keeping yourself top of mind through social media and through other avenues and getting face-to-face with your referral partners. So go out and don't let the market dictate how your business goes.
Love it, man. Winners win. We'll see you guys back here next week.
See ya.